Good evening, everyone, and welcome to the 13th Demo Day event. I just want to thank you all for coming and joining us this evening. Just to give you a synopsis of what Demo Day is, Demo Day aims to create a space for developers and digital professionals to share their work with their peers. We aim to encourage more persons to spend time honing their craft and culture, a space for potential investors or employers to identify talent. Demo Day is only one of several event series organized by the Jamaican developers community. Just to give you guys a synopsis of who the Jamaica Developers Community is, we are a community of creative thinkers, thought leaders, and innovators who love to work together to solve common problems. We are transforming the Caribbean community from a consumer to a producer of technology. I want to give a special shout out to our sponsors for this evening's event. They are Osub Limited, Vertis Technology Solutions Limited, and Particular Presence Technologies Limited. My name is Jada Ferguson, and I am the one of the community coordinators, and I will be moderating this evening's event. I would also like to give a great shout out to our co-founder who's present today, O'Shane Bailey. So everyone, our speaker for this evening is Sammarieo Brown. He is a data engineer and quant trader or researcher. So Sammarieo Brown is a data engineer and quant trader or researcher located here in Jamaica. So we're here joining him today, and he is going to do a demo day on how to use data science and AI to predict and make trading decisions based on predefined rules. So sit back, relax, please ask your questions while the presentation is going on, but just keep them in the chat. And also, please make sure to answer questions at the end of the demo day as well. So I want to thank Sammarieo for being here with us, and I'm just going to give the floor to him right now.
Hello, everyone. Thanks, Jada, for having me. And of course, just special welcome to everyone who took the time out today to join us on our demo day. Just give me a sec, let me share my screen before we begin. All right, so without further ado, let's get started. So like Jada said, I am Sammarieo Brown, and I'm a data engineer and quant research trader. And of course, I'm a startup founder of Alpha Quant's Capital Investment Technologies, where we primarily focus on researching financial modeling and how we can optimize trading strategies and models for investments as well. In terms of what I study, I am a final year student at UMONA. I'm pursuing a bachelor's degree in computer science and statistics, double major. And this is what sort of motivated me to focus on, because I have a love for investments, I have a love for trading and so on, but I also have a love for AI and data science. As you can see, I'm a data engineer, so I work primarily a lot with data, and I wanted to merge the two fields, so AI and investments, which is why I ventured into this space. And I want to share with you today how I go about doing so and some key lessons you can take. And if you're also interested in something of this sort, then you can develop your own investment strategies, help you optimize your profits and minimize your risk. So, of course, let's get started. So what we'll be talking about today is financial machine learning and artificial intelligence, and how we can apply machine learning and AI investments and trading. So I'll be touching on 3 main points this afternoon, or this evening rather: discretionary trading and how discretionary trading differs from systematic trading. Secondly, a data science approach to algorithmic trading, looking at a traditional rule-based system. Then we're looking at time series analysis, more statistical methods to algorithmic trading, and of course, backtesting. And finally, we'll be talking about machine learning and AI in investments, looking at financial machine learning, taking a look also at the data pipeline that we primarily use, model creation, and a glimpse at modern portfolio theory. So machine learning and AI has a wide range of applications in the field of finance and investments, and a lot of big institutional traders, big banks, hedge funds, and wealth advisors, or just wealth institutions, incorporate data science and AI in their investment strategies. I will talk about that a little bit further. But I believe that we also, as retail traders, have the capability to develop systems, complex systems like this, to help us with our trading decisions, which is primarily what we'll be talking about today. Excuse me. So, discretionary trading. So, discretionary trading, a discretionary trader is someone who executes trades or investments based on his or her own opinion or intuition about an asset. Right? For example, let's say you're an Apple fan, you love Apple, all your products are Apple, you have an Apple phone, you have a Mac, you have an iPod, you have AirPods, you love Apple, you're a fan of Apple. This may motivate you to buy shares in Apple, not for a specific reason, but just for your love and your intuition. You think the Apple prices are going to go up, so you decide to invest in Apple, or you hold some Apple shares of that sort. Right? So discretionary trading doesn't follow a particular rule-based or mathematical method of investments, right? So you're basically going off your own personal opinions or intuition. And the problem with this is, bear in mind that discretionary trading is not bad. It's profitable for some traders, but they often encounter certain problems like managing their emotions while trading, especially if you're an active day trader, or your personal bias. Always input your personal bias in why you're investing in asset with no particular reasoning per se or confidence in why you're investing in that particular asset. Often see discretionary traders use price action and various forms of technical analysis, where a lot of persons, they drop some lines on the charts, like support zones, resistance zones, and so on. And then, you hope that that particular rule works, but sometimes, or most cases, they don't really work. Which leads us to our second point, algorithmic trading, or algo trading for short, which is more so a rule-based trading system with a set of predefined rules to invest. Very simple. Example is, for example, you believe that the price of Apple goes up every morning at market open, or the volume of shares invested every morning at market open pushes the price upwards. So you create a hypothesis and you say, all right, I'm going to write a script to gather data for Apple, and every morning you have the script activates and it buys Apple, whether or not it goes up or down. It checks if the market is open, it checks if you're investing in Apple, and it places the order for you. So it sends that information over to your broker. So you don't have to manually trade. So the algorithmic trading eliminates the process of manual trading and bias, as well as emotions. So this sort of paved the way for consistency and minimize emotional interference with trades. However, there's a disadvantage to algorithmic trading in a sense where market conditions tend to change over time. So you might have a particular model that works pretty well for maybe 60 days or 6 years, but later on you realize that your strategy isn't profitable anymore because you may have fixed parameters or fixed rules on why you're buying or selling. And those parameters may change based on how the market condition changes. So that's a disadvantage to algorithmic trading. But we can talk about how we actually optimize or sort of get over that disadvantage in a later section of the presentation. It's also keen to note that algorithmic trading also uses indicators to place trades. For example, we have what we call an RSI, a relative strength index, which looks primarily or theoretically at the overbought and oversold zones of a particular asset. And you may use this indicator to say, all right, if the market is overbought, I'm going to sell, and if it's oversold, I'm going to buy, for example. So you may use indicators to assist in your algorithmic trading or particular rule-based system. And I think it would be important to share some stats with you that I came across from Wall Street, where it shows that 60 to 73% of the trading volume in the US is performed by algorithms. So algorithmic trading contributes to 70% of the total volume traded in the US and 40% for India and 75% overall for global trades. So tying back to what I said with institutional investors, they're using algorithmic trading for the investment strategies. And this may give us, this should give us a reason. If these big guys are using it, then why can't we use it to develop our own trading strategies, right? Any questions so far? All right, I'll take that as a no. So going further, looking at a data science approach. So we just talked about a traditional algorithmic trading approach. Now let's look into how we can apply data science, a data science approach to algorithmic trading. Not so much traditional rule-based, but developing confidences in where we're actually buying or selling a particular asset. So I broke this down into two sections: time series analysis and statistical methods or statistical checks. Well, time series analysis looks at analyzing a sequence of data points collected over time interval. For example, the daily price of Apple or Bitcoin or hourly price of a particular stock or currency that we want to invest in. So with time series analysis, we may be motivated to forecast the time series. And here are some examples of the popular models that we use for time series forecasting, such as the ARIMA model. Or we may want to decompose the time series into its components, for example, the trend, the seasonality, and the residuals, and investigate these properties individually to see if there's any pattern or if there is any insight into why we probably want to invest in a particular asset. And then we have statistical checks where we're looking at certain components of the time series for making quantitative decisions about a particular investment process or processes. We're also looking at stationarity based on whether the property of a time series changes over time or not. So you can see two main types of stationarity. We have weak stationarity or strong stationarity. We also look for autocorrelation, co-integration, and regression. We do some regression analysis on the time series as well. So these are some data science approaches to algorithmic trading. And I compiled 4 simple steps on how we can go about creating an algorithmic trading strategy. So step 1 is to create a hypothesis about the market of a specific derivative that we want to invest in. Like I said, we may believe that the price of Apple goes up every 9:30 when the market opens. That's a good hypothesis. All right, so if that's a hypothesis, then we say, okay, well, 9:30 every morning, the price of Apple goes up. The second step is to gather the data, of course, and clean the data, and then we want to backtest our hypothesis over a period of at least 1 year. So backtesting is going back in the past and checking at every 9 o'clock, every market open, buy Apple and see what the result looks like. So we're testing our hypothesis and see whether it works or not. And step 3, we want to evaluate our strategy. We won't know if our strategy works until we actually see the results of the strategy. So we want to look at certain key metrics. So quantitative developers or traders look at metrics such as the win rate, the alpha, which talks about the edge that you have over the market, the Sharpe ratio, your drawdown, your maximum drawdown, how much am I losing using the strategy, and so on. And the final step is to do what we call a forward testing, which is pretty much the opposite of back testing, where you want to test your strategy for at least 30 to 60 days in a live environment to see if it matches the performance of what you're seeing in the back testing results. And once you're comfortable with those results, then you can say, okay, the strategy works, I'm going to deploy, or the strategy doesn't work, so I'm going to do some more testing, or I'm going to scrap it and start from scratch. That's pretty much how we actually create an algorithmic trading strategy in 4 simple steps. Feel free to stop me if you have any questions, of course. And I'm going on to my final step, financial machine learning. Now, in finance, machine learning algorithms are used to detect fraud, automate trading activities, and provide financial advisory services to investors. So here's a few examples of financial machine learning. We're looking at financial time series forecasting, not so much on the LSTM or the traditional ways, but we want to look at like deep learning and applying recurrent neural networks to or time series to forecast asset prices and so on. Then we can look at pattern detection and pattern recognition using deep learning to detect anomalies in the time series, or perhaps there may be patterns in the time series data that whenever this pattern arises, then there's a certain outcome. We can use deep learning to detect those patterns. And we can also use financial machine learning for sentiment analysis of financial news and just what persons are saying or feeling or thinking overall about a particular asset or a symbol. For example, Bitcoin. A lot of persons tweet about cryptocurrency and Bitcoin and how they feel about Bitcoin. And as an investor, you'd want to know what the census is about that particular asset. So you may scrape data from Reddit or Twitter, other person tweet on Twitter or Reddit, and see whether or not those sentiments are positive, or other person like, oh, Bitcoin to the moon, or we're going to crash Bitcoin, right? And you may say, well, I want to buy Bitcoin, but the general consensus is that persons are going to sell or persons are going to buy. So you want some idea of how persons are thinking about a particular asset. Finally, we can use financial machine learning for modeling risk and portfolio optimization. The fundamental rule for investing is that we want to minimize the risk and maximize our profits. And that's basically what modern portfolio theory is all about. So let's look at what a financial machine learning pipeline looks like. And this is pretty much a pipeline that I use when I'm creating any strategy before deploying. So first section of the pipeline is to gather the data. We need data before we can train a model, because your model works with data. All right, you need clean data as well. So here I use Yahoo Finance as the data source. For example, you have other sources like Alpaca, Binance, Google, and so on. But I'm using Yahoo Finance, which is pretty much an open source framework that you can use. You can install Python and you can pass in a particular ticker with the start date, end date, and you get the data for whichever asset you want. So we get a source, gather the data, store that data in a data set, and then we may want some financial news as well if we want to perform some sentiment analysis. So we can also gather that raw data, do some data processing, and then we can implement a natural language processing on those tweets or financial news and compile our sentiment analysis to a final data set. So we have both the stock trend and sentiment analysis around a particular stock. Then we want to split our data set into train and test data set, and then we create our model, test our model, evaluate it, and then plot the results on a chart to give us a better understanding of when we're selling and when we're buying, to see whether or not it makes sense. So I'll just allow you to take a look at it for a little bit, process it, and see if it makes sense to you. All right, so I'm moving forward. So creating a machine learning trading strategy.
Hang on one second. Can I ask a quick question?
Yeah, sure.
Okay, so do you have kind of a language processing algorithm that goes out, let's say, to Reddit and Yahoo News and Google News, and is trying to get a sense of the market sentiment on a particular, let's say, like Bitcoin, like you said? Is that part of this process? It's almost like a
Yes.
scraper that processes languages and pulls it in. It's trying to determine what people are thinking.
Yeah, this is something that you can actually develop, which is why I added that particular sentiment analysis section in the pipeline here.
Okay, all right. And is that something that you've actually developed already, or is that something that's off the shelf, kind of open source work, or where's that coming from? That portion of it.
Oh yes, so I actually have an example of this. I won't be demonstrating this today, but yes, I actually developed a sentiment analysis application to gather data on a particular stock.
Okay.
Yeah.
All right, cool. Thanks. That's it for now.
Sure. Yeah, so creating a machine learning trading strategy. So step one, like I said, we need to gather data. That's the first part.
Mr. Brown, I do apologize. There was a question that asked in the chat. It's do you have to pay to get access to the data you need for analyzing, or are there free public resources? I think you answered that because they are always free, but are you using any paid resources? I'm assuming no, but go ahead.
Yes, that's a good question. It depends on the type of data you're getting and the frequency that you're getting the data at. So with the free ones that we have here with Yahoo and Google, those are open source. You can get them, but you have certain what should I call it? For lack of a better word, how much time you can request to get the data, for example. So let's say you want a minute by minute data, you may have to pay for that data subscription. So Alpaca has a plan where you can get data by the second, versus Yahoo, where it's free, you can only get data maybe by the minute or by the day or by the hour. So it depends on how fast you want to get the data, how accurate you want to get data. You may have to pay for those packages or those subscriptions. I hope I answered that question.
I think you did, and I think a follow-up question to that is geared towards when it comes on to data for Jamaican stock market. Thoughts on that? How do you acquire that type of data?
Yes, I was actually looking into that. So I think prior to this year, JC allowed you to extract the data. You could actually do some web scraping and extract the data. However, the sort of hinder that now where you have to pay for API. Basically, I think it's 2,000 US for subscription for JC. So I think you have to pay for that to get like an API connection to JC to gather the data. But you can always check that out. You can go on the JC website and you should see some further information on that.
Okay, noted with that. Because I know that I think in 2021 they claim that we should not scrape their website. Not that I'm saying that we do scrape it, but they have some data policies in place to prevent certain actions.
Yes.
So, and so I had asked.
Yeah.
Right.
Yeah.
Thank you for your response. You can continue.
Yeah, sure, no problem. So yeah, like I said, step one, gather your data. And step two, which is probably the most important step, is we need to clean your data. We need to prepare a data set. So step two involves data preparation and data cleaning. We may look for null values if we're doing sentiment analysis. We want to remove stop words. We want to remove just components of the text that isn't necessary to our data set or to a model. For example, emoji, let's say someone posts some emoji, you may not need that particular emoji. So you want to format your data, clean your data, prepare it. You may do some date formatting and so on. This step also includes conducting statistical checks for stationarity and autocorrelation, similar to what I mentioned earlier on. And then step three is looking at feature importance and feature correlation, which features actually influences the particular stock price, maybe interest rate whenever the Fed releases interest rate every month or whenever they do. You might see where the stock price go up. You might look at unemployment rates and other macro and microeconomic data. So that's where feature importance comes in. Then you want to do some normalization to normalize the data, split the data into train and test. Then you create your model. Here, for example, you can create a LSTM model, and then you do your predictions. And finally, you, similar to a previous step, you do your model evaluation. So you need to know whether or not your model is working or it's profitable. So you evaluate your model and then you test your strategy, back test, forward test. And there you go, in 4 simple steps. I just showed you how to create a machine learning trading strategy. So let's look at some further advancements in financial machine learning and AI. So we can look at Monte Carlo simulation. This is primarily more around risk management and option pricing, because options is another way, it's another form of investment. We may want to price an option, we can use Monte Carlo simulation for this. Also, a very interesting topic, one that I'm actively researching, is what we call quantum finance theory. We're looking at certain concepts in quantum mechanics and how we can model finance and economics and incorporate these concepts, mainly on the premise of the uncertainty with financial markets, right? And you see where it has certain characteristics of quantum mechanics, where the market is quite uncertain. So you can look at Schrodinger's uncertainty principle and so on. You can also use quantum machine learning to enhance speed of trading and so on, or information theory. And then finally, alternative data. And this is something a lot of institutional investors are actually getting into as well.
One second for me. This is Ray from, I'm the founder at Synodex Software, by the way, but quantum machine learning, all right? What does, now when I hear there's quantum as in we're using quantum computers, and then there's quantum, it's just some nomenclature to make something sound sexy, but we don't actually have quantum technology there yet. What is quantum machine learning? And I may have just missed it because I was doing something else, but what is that again?
So quantum machine learning is actually a research area where we're actually researching now. This guy from Stanford actually came up with this concept of quantum artificial intelligence. Basically, how is researching how we can optimize deep learning algorithms to make them run faster, to do faster calculations and vectors and so on.
And that's so actively using quantum computers?
Not at the moment. Like I said, it's a research area. So
okay,
I
so
guess
it's
it's
purely in research.
Yeah.
Right now.
Well,
theoretical.
Right. Just to add a bit of meat. So it's more towards looking at the algorithm side and not necessarily the computational power. So how to optimize the algorithm to process data faster to come to a conclusion. With quantum mechanism, it's generally with general modern computing power, it uses binary, right? And with quantum mechanics, it's more towards, I don't remember the unit, what it's called, but it's like looking at like different state at the same time, even though in essence, it's some, yeah. So it's pretty much looking at the algorithm that used in those cases, how to optimize it. So it's pretty much preparing for the future of implementing, these algorithms on quantum computers that are using, can process quantum. Yeah, I'm losing words, but yeah, I think you get what I'm saying.
Yeah, I think I got it. So basically, because I've read about that, they optimize the algorithm because you can still write quantum algorithms using conventional computers, and if you put them on a supercomputer, it doesn't get as fast, but you get the algorithm and the usage out of it, and then you wait for the quantum technology to be developed, and then you stick it on a real quantum computer. Am I saying the same thing, kind of?
Yeah,
that's pretty much it. Yeah.
Okay. All right. Cool. All right. Thank you.
Sure. And finally, alternative data. We look at, for example, satellite images. I remember this story. I always tell people about it, where Renaissance Technologies, I believe it was, profited off Walmart sales by looking at satellite images of the number of trolleys and cars in the parking lot. So you can know that the more cars you see, the more trolleys, the more sales we're expecting for that particular quarter for Walmart. And so that can give you some insight. Uh, Also, look at satellite images for futures like rice, corn, beans, and when they're harvesting. It can get the idea of when those prices are going to go up, or if there's a shortage, or if there's some drought. Or you can also look at oil tankers. I think Bloomberg gives you data on the paths for oil tankers and how many tankers are there for oil, and that can give you an idea of the supply and demand. So that's how these big guys are using alternative data to enhance their trading decisions and maximize the profit. I believe that brings us to the end of the presentation. Feel free to reach out to me via email, Sammarieo@alphaquantscapital.tech. You can reach out to me or connect with me on LinkedIn at Sammarieo Brown or Instagram at Sammarieo Brown. If there's any other questions, of course, please drop it in the chat and then we can discuss. I've shared an example with you, particularly two, one looking at the backtesting results and reinforcement learning algorithm. But before I go further, are there any questions?
Okay. Can you display that screen again with your contact information?
Sure.
I'll just use. Is that your WhatsApp?
Yeah, that's my WhatsApp.
All right, that's the one I need then. Okay, cool.
I can get this information in chat if you need that as well.
Yeah, you know what? That's a good idea. Thank you.
All right, there you go. So I guess there are no questions. So I'll just show an example. I won't be going quite in depth with the code, but I'll just briefly show you how we can create a reinforcement learning algorithm for trading. We're looking at DQ learning model or algorithm here. So what we want to do initially is to train a trading agent, and what we first need to do is to create an environment that provides price and other information, offers trading related actions, and keep track of the portfolio to reward the agent accordingly. All right. So we're using OpenAI Gym. That's a framework that you can check out to create a trading environment. It's basically a trading game. So we want to reward the agent when it makes profit. And of course, the goal for the trading agent is to maximize its utility, maximize its profit, and wants to punish the agent when it makes a loss. All right. So the agent will get certain data like the scale price, the volume, additional technical indicators such as the RSI, the 5 and 21-day returns. An agent can choose from 3 actions, can decide whether to buy, hold, or to sell the asset. All right. You also incorporate in trading costs. We're set to 10 basis points by default here. So we're using TensorFlow and OpenAI Gym. So just import the packages that we need. And we'll just do some housekeeping and set some helper functions here. And then we set up our environment. So we're using 252 days. It's basically the number of trading days that we have in a year. So set up our environment, initialize it, as well as some parameters that we have. And then we make the environment. So we pass in Apple, the number of trading days. We're actually using Apple as a ticker here. And then we can look at the data. So you can see the top, but the data types. So we have the returns, 5-day, 2-day return, 5-day, 10-day, 21-day returns, RSI, some additional technical indicators, where the agent can learn from, hopefully, and make trading decisions. So we're passing in our environment parameters, and then we define a trading agent. So once we pass in these parameters, now we go about building the model for our agent, creating our layers. So you can just have a look here, what this looks like, what our model looks like. And we implement a greedy policy here.
I'm just curious, what does the function Atom do? ADA, if you don't know off the top of your head, just ignore me. I was just curious.
Okay, so I think Atom works, where is it?
There
Yeah,
it
this
is.
is for the learning rate with optimizer.
Oh, okay. So it has something to do with the compiler. Okay, that's fine. I got it.
All right, cool. So what I particularly want to share about this part is how the agent actually runs and updates the more it actually trains on the data. So once you initialize the model and you created the agent, then we want to train the agent and give you an example of how this looks. So the agent is allowed to make less than 1,000 steps.
Sammarieo, are you there? And all right. Give us a second. I think some. Yeah, I think he dropped off. Message him.
Yeah, it seems as if my internet just dropped a while ago. My apologies
Yeah.
about. Yeah, so
No
I
problem.
was saying that you can see where the agent actually begins to learn and maximize its profit. And at one point, it actually beats the market.
So is it sucking in, you're sucking in, let's say, trading data from some third-party company that gives you, you know, minute-by-minute trading information or hour-by-hour trading information of what a particular stock is and what the value of it is at a particular point in time? Is that what's happening here?
Correct. So
Right.
that's what we did initially when you pass in the Apple data of this up.
Oh, okay. So you're just,
Yeah.
how long does it take you to train this thing?
So this can actually take you a while. It took a few hours to train the agent here. But if you're actually using a GPU, then it should be no time. We're actually using a CPU, so it's actually going to take quite a while to train.
Okay.
Okay.
When you say quite a while, how long is that?
It can go up to hours, maybe 2, 5, even sometimes 10 hours, depending on how long you want to train the agent.
And then what's it doing in that means? Is it looking out into the markets and then sucking up? Is that the time to suck in the data and find the data, or is that the time to crunch the data and
It's
train
more,
the agent?
yeah, it's more about training the agent at that time, because getting the data isn't the hard part. I think that's the easy part. You just send a request to API, you can gather your data. But no, when you're training the agent, that's where it gets more complex, and that takes up a lot of computational power.
Okay.
Yeah. Question. Could you just for like everyone, could you just scroll back where you have the agent on the market? I know that you had explained it earlier, but could you just walk through like what's happening, for example, at index like 0, index 10, and just to tell us the difference, what's happening at agent market, the wins, and basically what that means at the different steps.
Oh, sure. So at first index, so going up by 10. So at index 10, that was when the agent just began to actually learn from the data and make decisions. So like I said, the agent can buy, sell, or hold, right? So it's looking for the most optimal profit and it wants to maximize its utility. So when it just started, it didn't quite know what a good trade is per se. It's like training a baby, right?
Yeah.
So as it learns, we're going to make mistakes, but you punish the agent when it makes a mistake and you reward it when it makes a profit. So it's pretty much here. So it's making up few losses here for the first few indexes, while comparing that with the market performance. Again, so the market is performing positively at 4.6%, 23%, and so on. So as the agent trains, the goal is to reduce the loss. And you can see the loss is being reduced here.
Yeah.
And as well, the profit is to be maximized. So the goal is to maximize the profit. So you can see more positive returns for the agent as we train more and more.
So these are trades that it makes after it's learning, and then it makes a trade, and then it shows up on the screen, and then you keep training it, and then it makes another trade, and you see the results. Is that what's happening?
In a sense, yes. It keeps buying or selling. Looks when it makes a profit. If it makes a profit, then it knows, well, I'm doing something right. If I make a loss, then like I said, you punish it. It knows not to do what it did before, and it learns from that mistake.
Okay, and then it's just analyzing, several parameters that you're throwing at it all at once. So it might be some satellite data mixed in with what they're saying on Reddit and open and close hours, that kind of thing. So it's got this various data, and then it's analyzing it. And okay, gotcha.
Yeah, that's it.
What is ESP? EPS? Sorry, remind me, what is EPS?
That's a good question.
Say that again.
What is EPS?
This is the profit. What's it? The don't remember off the top of my head.
It's something to do with the profit. And then are you the underlining ML code? Is that stuff open source, or did you have to write that from scratch as kind of a school project? What are you using? What's the underlining ML code that's the machine language secret sauce?
Yeah, so this is a personal project with additional research.
Okay, so you wrote everything from scratch?
80% from scratch, and the rest research.
Kind of research.
So using the documentation for Jim, checking out how to do a particular thing, and then actually writing the code for it.
Gotcha. So maybe snippets of code from someplace, but there's no open source code underneath it for ML specifics. Like you basically had to write it all or find snippets of code that might work to do certain things, right?
Yeah, pretty much correct. Yeah.
Okay. All right. That's cool. It's impressive. Does it work? Can we use it?
I would recommend just going off the bat and using an algorithm like this, but I would say more improvements can be made. You can add more data, and once you're comfortable, then yes, you can go ahead. I'm not giving financial advice. saying you,
Of course not.
but once you're comfortable with the results that you're getting, of course, we can do some hyper tuning and add more data because the model works off data. Do some more training, longer training, and then we can decide whether or not we want to deploy a model.
Okay. All right. But theoretically, it could work. Like if we gave it money, can it buy stocks?
Theoretically, yes.
Okay.
Yeah, theoretically. Yeah, so that's pretty much what I wanted to share with this. I realize my time is up, but we can look at the performance against the benchmark, the annual returns for the market versus the agent. So the market is in blue and the S&P is in, well, Apple rather is in orange. So you can see how it compares against the benchmark.
Okay. Let me see. So returns. So the agent, so that's the result of the agent, right? And
Correct.
then the mark, so that's like the S&P 500, just average of S&P 500 or something like that performance. What's market, or just the average of everything everywhere?
This is the average of the stock that we're using. So we are using Apple, so you're looking at the returns for Apple. And how, so if you're supposed to buy and hold Apple, how would that perform versus using an agent? That's pretty much what we're saying here.
Okay, got you. Got it. Versus you trading, going in and out of the market, right?
Yeah, using an agent.
Okay, and that's your profits there versus that. Okay. And then does this take into consideration fees?
Yes, we add some
fees?
trading costs. Yes, we add trading costs to this as well.
Okay, all right. That's
And we
pretty
can also
impressive
do
towards
some
the end.
more stuff like looking at slippage, order slippage, and so on. If we wanted to go to that extent, we could do that.
Okay. Now, is this what period of time is this over?
This is
beginning
from
of the chart to the end.
Yeah, this was from I think 2015 data to 2018 data.
Okay.
2015.
But what period of time was your agent running?
It was running for that period. So it was trading and placing trades at the start of the period to the end of the period.
Oh, you started this in 2015?
No, back tested data. So back to data.
Okay. You back tested data. Okay, got you.
Yeah.
I was gonna say, okay. All right, so you back tested data based on the. Okay,
Yeah.
I got you. So theoretically, you just drop in an active thing, and it should maybe work. That's scary. Okay.
Yeah.
Can you theoretically run this on this year's data?
Yes, we can. So all we need to do is to connect to an API. We could use some broker. If there's some brokers that offer algorithmic trading API, so we just connect to the broker, send a request for whichever time frame it wants, and then pass that data into the model. That's the only amendment to the code that we need to do to get this live.
Okay. I got a ton of questions, but I'm not going to hog the time. I'll let you go ahead and finish. I'll contact you later.
Sure, looking forward to it. And the final thing that I want to share, I remember speaking on certain parameters that we look at. So I'll just show you an example of why I would probably want to analyze this. So this is the next strategy, but I'm primarily looking at the performance. So like I said, there's some metrics like the annual return, what that looks like, the cumulative returns, and whether or not these are good indicators for buying or selling. So we normally split that into in-sample and out-sample. So in-sample would be the back testing period, while out-of-sample would be the forward testing period. So as you can see, in-sample, when we're training a model, we got like a 45.6% return, but when you actually did some forward testing, that was much lower to a 7.5% annual return. So this can give us an indicator to say, well, our model may have overfitted because it's not giving us the result that we saw in the backtesting or in-sample period. And then we want to look at how much money we're losing per day. All right, so look at the maximum drawdown where we lost 18% of the account value overall. And out of sample, that was like 11.8%. So these are some metrics that we actually look at. we want to analyze whether or not the model works. What was our total profit? Short trades versus long trades, how much profit we're making when we go short, or when we sell an asset versus when you go long when you buy an asset. As you can see here, we make more losses selling an asset than buying an asset or going long. So we could use this information to say, well, let's minimize the number of shorts or sell trades that we execute, or don't sell at all and just focus on buying a particular asset. And yeah, so that's pretty much it. I believe that takes us to the end of the presentation. If you guys have any more questions, of course, please reach out to me. I drop my information in chat and we can discuss further. Oshane, over to you.
Okay, thank you, Sammarieo. So if there's no other question, we are going to wrap up. As mentioned before, this information can be found in the chat. Also, I'm going to drop the chat for the community, Jamaican developers community, Telegram link in the chat, so you can join the community and ask additional questions if you're not already there. Give me a moment, getting that link. And in terms of upcoming events, we'll post additional events that will be keeping for the rest of the year on our meetup group on meetup.com. Just giving you a heads up, most likely there will not be any additional events, but if there's any special, we'll update it there. Going towards 2023, we are going to have some additional events on a monthly basis, which included in crash courses. We are also looking forward to provide more support and job opportunities to the community. And that's pretty much it for like this year going on to next year. But I think next week we are going to do a quick community pulse to get like feedback from the community about, you know, ideas, reviews about how we did this year, what we can do to improve, and also getting a bit more from you, the community, what type of content and events we should keep, because at the end of the day, we're keeping all these events, doing everything that we're doing to, you know, bring greater opportunity to the Caribbean. So of course, we definitely want to hear from you how we can improve going into next year. So with that said, as mentioned, I'm dropping the link in the chat so you can join the community Telegram chat. And that's it for tonight, folks. Take care, all the best, and have fun.
Thank you. Hey, let me make a quick, O'Shea.
Yeah, go ahead.
O'Shane, let me, and I haven't talked to anyone to ask permission. I normally do that. I know we spoke before, O'Shane, and I'm actually going to contact you again after this, but I'm originally from Guyana. I'm the founder of Synodex Software. We hire a lot of I hire all my developers